Good afternoon, ladies and gentlemen. Welcome to the FSDC Industry Exchange Series webinar. My name is Rocky Tong, and I'm the Director and Head of Policy Research for the Financial Services Development Council. Today, we are launching a report which was published on March 3rd, early this month. And the report title is Hong Kong as an International Financial Center, Enhancement of Hong Kong's IPO Offerings. This report was prepared with the aim of adding further strengths to our capital market offerings. In particular, when we are one of the best performing primary markets over the past decade, we feel that there are something more we can do. So with that in mind, we started a working group, which was co-led by Andrew and Ding Zhong, who are with us today, both of whom are our board of directors, and they are respectively conveners of our Corporate Governance and Mainland Opportunities Committee. Of course, there are other members joining us for the working group, and that would include Virginia Lee, who is also joining us today. Other members and contributors are detailed on the last page of the report, and please feel free to download our report and make reference to it. So today we are going to have a couple of sessions. One of those would be, we're starting with a presentation that is going to be prepared and delivered by Andrew. After which, we're going to have a panel discussion that would include both Andrew, Ding Zhong, Virginia, and our very own Dr. King Au, who is our Executive Director running the operation of the Financial Services Development Council. So without further ado, Andrew, can I pass the floor to you, please?
Yes, thank you, Rocky, and thank you very much, everybody, for joining us today. Hong Kong as an International Finance Centre is the role of the Financial Services Development Council. I'm privileged to sit on the board, and we have a wonderful CEO in King and a wonderful head of research in Rocky. And the role really of the Financial Services Development Council is to call out when it sees opportunities, to champion the competitiveness of Hong Kong as an international finance centre, and advise the government on areas of attention in order to retain and develop further the great competitiveness of Hong Kong as an IFC. It's all about Hong Kong as an IFC, and the bedrock of that is a very, very strong primary capital market based on a very strong IPO market. But it's worth bearing in mind that the IPO market has a big knock-on effect on other things like secondary financing. It is relevant to the development of bond market and other products in the market. And it really is the bellwether for market development, I think, in Hong Kong. So we just thought it was very timely, given there's so many moving parts geopolitically, so many moving parts economically at the moment. And as we emerge from COVID, it's very important that we have a look at the IPO framework. And what we've done is we have actually got very close working relationships with our friends at the SSC, our friends at the Stock Exchange, and our friends at FSTB. And we're just putting out there really areas we feel with appropriate attention from Hong Kong Inc. in financial services, it could be a game changer for Hong Kong. So maybe just reflect on this first slide, talking about Hong Kong's strong IPO market and listing framework. Let's be absolutely clear, it's not broken in any way at all. Hong Kong is ranked as the world's #1 IPO venue 7 times over the last 13 years. It raised 329 billion last year and almost 100 new listings. And the total market cap is 41 trillion Hong Kong dollars. So it's a very successful market. One of the couple of strong features, unique features of Hong Kong market, obviously Hong Kong's role itself as an IFC, which is based on rule of law. It's based on free flow of capital, etc. But also its unique position as in many ways the offshore finance center and capital market for mainland China. But another area of great success has been the real focus on quality and market conduct, which is exemplified by the approach the SSC and Stock Exchange takes in regulation. We pride ourselves on our regulation. And so whenever we talk about market development, we must always be mindful that the quality of a market is also very important to Hong Kong's reputation, but also very important to attracting the size of company we're looking to have. Another area very relevant is the versatility of the listing framework. We're not talking regime change here. The listing framework has changed over time. When I was chairman of the listing committee a few years back, it was a privileged time to be involved as Hong Kong Inc. looked at how to bring in weighted voting rights, how to bring in pre-revenue companies in biotech, and how to facilitate secondary listings or potential homecomings of innovative companies overseas. That's just an example of when there's a market need, looking at how to develop a framework within the existing regime in order to move of a market, and in the cases of biotech, lead the world as the only market with a dedicated framework for biotech. So that's very important. And another important area is Hong Kong is in a global market. It's not just the offshore market, it's a global market. So broadening investor opportunities for investors in getting, as I said, secondary listed companies coming back and getting innovative companies to come to the market. So we think now's the time to have a look at how we could be even more versatile and more innovative without rewriting the capital market chapters. Next slide, please. So, and then we move on to one after that, please. So where are the opportunities we have in Hong Kong? Well, I think the key one, and the working group was very supportive on this with great research. Already Hong Kong capital markets is doing a lot in the new economy. We have the chapter 18A on weighted voting rights and innovative companies returning. There are special connected party transaction arrangements for technology and innovative new economy companies as well. But the reality is the story of the development of China on the back of the largest unicorns in the world, and with the GBA and Shenzhen National Innovation Hub just across the border, and the development of Shinex and Beijing market as well in this space, surely we need to be looking at what more we can do to secure and get to the next stage, the great success we've had on biotech and innovative companies through the changes in 2018. So just have a look at a few of those data there. 71% of the IPO was contributed by TMT, industrials and healthcare. Worth bearing in mind, industrials these days are high-tech industrial. All of those align very, very well with what's going on in GBA, what's going on in Shenzhen, but also the driving force of the unicorns in the Chinese economy. Also, as a part of the developments we had in Chapter 18A, and also just generally, there's a vibrant startup scene and a vibrant local ecosystem for biotech and new economy industries in Hong Kong, and particularly in Shenzhen and the rest of GBA. So surely we need a way in order to attract yet more of this, so that there isn't the possibility of these potentially very great companies of the future thinking that Hong Kong maybe doesn't want them or maybe isn't welcome to have them. So accelerated development, new economy, massive driver. Next slide, please. And then there's another big driver at the moment. I'll speak carefully about this. It is related to the geopolitical environment. And really, it is US listings of non-US entities in the US, and in particular Chinese securities. Geopolitical uncertainty is very clear. Very interesting, there's just been the PCOB US SEC delisting list produced, which I think all of us are trying to digest what that means, but it's a very significant regulatory development. And a combination of a geopolitical development, that regulatory development, and also some companies just deciding, weighing things up, they'd rather be based back nearer to home, is actually creating an environment where the propensity and scale of entities to want to come to mainland China and Hong Kong back from the US and other overseas jurisdictions is a very powerful force at the moment. It's very interesting looking at the 19C chapter, which came in 2018, which I mentioned is the return of secondary listings, and the most obvious first one was Alibaba. It's interesting, there's been a lot of secondary listings, but also there's been what's now dual prime listings. And in other words, the use of Hong Kong as an alternative market either as a secondary market, as a dual prime. There's clear demand for that. So it's also how Hong Kong be an attractive listing venue for overseas companies in the Asia time zone. So dual primary, secondary listing, and then of course we got another very interesting situation here. What about the international composition of the market? The senior people at the stock exchange quite rightly are always championing Hong Kong is an international market. It's more attractive to mainland China policy and mainland China companies when it's more glued in with what's happening internationally and attracting international company and international capital. So an area we're also raising is how to expand the international composition by attracting overseas companies, not just Greater China issues, which have variable interest entities, but companies from nearby manufacturing spaces, such as ASEAN and along the Belt and Road. And when you look at the huge potential of RCEP, the new regional trading market, the ASEAN-Hong Kong Free Trade Agreement, and the Belt and Road opportunities, particularly in ASEAN, and the move of China +1 in a lot of manufacturing companies, and the different approach organizations are taking to supply chain for potential, again, for listings in Hong Kong of these type of companies, we've got to make sure we're giving a welcome home. Next slide, please. Right, so what are we going to do? Let's be very specific about this. There's a couple of areas we think there's good support for and can be game changers. When you look at the national priorities in mainland China, and in particular how implemented in mainland China, innovative companies and hard tech companies are the bedrock of this. And so many of those unicorns are hard tech. What I mean by that is they don't qualify as biotech and are innovative, but primarily producing software, technology, equipment, etc. A lot of these have the features of very significant upfront research and development. And in many ways have many features of biotech and innovative companies, which were given concessionary treatment in chapters 18A, 18B, and 18C. So what we're suggesting is, why don't we take the good features which have worked well in biotech and the early chapters, changes in weighted voting rights and in secondary listings, and broaden it to hard tech. There's been a good implementation of a SPAC regime as well, and take some features from that, so that we're not totally reinventing the wheel. We're taking what's worked already and making the recommendation relatively straightforward and de-risked. So what are the key features which safeguard in chapter 18 in terms of weighted voter right, innovative companies? It's things like pre-revenue company, but there needs to be a history of rounds of funding by experienced independent professional investors who've been able to price and value it. It means some form of accreditation agency to support the existence and value and potential of the intellectual capital, which is subject to research and development. But we believe there's huge potential to take those features and then with proper safeguards, obviously, on corporate governance and proper safeguards on weighted voting rights in terms of we're not reopening the can of worms in any way on weighted voting rights. By sensible application of the features of existing frameworks, we can have a material expansion of the attractiveness of Hong Kong into the new economy companies. The second big point I want to raise is, at the moment, innovative companies are defined a certain way, and I think the application of that definition has been subjective by the SSC and Stock Exchange, and it's quite right the way to go. It's case by case, let's consider it very carefully. And there is a requirement, though, to satisfy what an innovative company is. Now, it's important to have a threshold, because I think everybody agrees you cannot have weighted voting rights and you cannot have a framework which covers absolutely everything. Otherwise, it doesn't serve the purpose. There needs to be some selectivity. But a number of market professionals have shared the views that This innovative requirement is subjective and restrictive, and is a serious concern which dampens the demand of new economy companies, or they're trying hard to get clarity early on. So what we're asking for is more clarity on the definition of innovative, and probably a broader consideration of that definition and an interpretation, and probably more facilitation from the exchange and the SFC in terms of, particularly exchange, in terms of how companies complying with the innovative or making the journey to come to Hong Kong can have support in the timeline on the safeguards and the corporate governance requirements they bring in as they migrate or as they list. So we're not asking to turn away the innovative company requirement and definition. We're asking to maybe broaden it, be agile on it, and more facilitative in how we apply it, in order that we don't lose a number of organizations who are looking to list in Hong Kong, particularly the mid-cap companies, that we don't lose them because the listing process feels too complicated and uncertain. So those are the two big recommendations, and our working group is very confident. We're very pleased to see the first recommendation was referred to in the excellent budget speech by a financial secretary. And our early discussions and understanding in the broader market is there's a lot of support, particularly for the hard tech. And on the innovative companies definition, let's have a look at how we can improve the process, but we accept that that would take a bit of time, but we accept there is a momentum for change there. We move on to the next slide, please. Thank you. And then really just a final point just to raise. It is very hard in a capital market, and Hong Kong's tried many variants, to provide meaningful capital market access to SMEs while satisfying the requirements of quality, the requirements of conduct, and it being cost effective. All we're saying here now is, given GBA's here, given Hong Kong is the de facto and must grab that position as a de facto financial center for GBA as part of being a worldwide global IFC, for China. The development of GBA, ESG in particular, the funding requirements on that, and the very high-tech manufacturing developing just north of the border in the GBA, let's have a fresh look. The Beijing Stock Exchange has got a big commitment to supporting SME financing. Let's just make sure we're providing enough on the menu to organizations in that market. I think we all have our views about GEM. GEM, I think, hasn't always been a vibrant market, and the post-GEM listing discovery process and post-GEM trading activity and secondary financing, there's a lot of questions which are naturally raised about this. But we just think, given there's a tremendous growth potential of SMEs in the region, let's reassess if the existing market structure remains conducive. Are we missing a trick? Should we have a look at something which is more tailored to SMEs, particularly those in the GBA area, and particularly those in the innovative and tech space? I know the exchange has been looking at this a number of times, and we support really this open-end holistic review of relevant frameworks and mechanisms. The next slide, please. So there we are. In a nutshell, let me just summarize one more time. Hong Kong is already a very successful IFC. We need to remain competitive. To do that, we always need to be seeing where the market's going, what the market need is, and being ahead of the curve, and being innovative in comparison to competitor markets. The bedrock is the IPO market. We've got a track record of successful reform and new frameworks in line with market demands. Given all the changes there are at the moment, geopolitically, and the explosion of innovative companies in the mainland, the development of the GBA, and the success of the innovative companies framework brought in 2018, lifting some of those framework successes and features and applying it to hard tech companies and more of the unicorns, particularly in mainland China, surely gives huge opportunity for Hong Kong. Interpreting the innovative company definition in a more facilitative way, whilst ensuring all safeguards on quality are retained, probably would be useful to have a fresh look. And thirdly, the game-changing nature of the GBA and the type of startup environment we have in Hong Kong and Southern China surely makes sense to have a fresh look at SME financing. And we just support all the major bodies in Hong Kong looking at this and hope we can help in any way in helping to bring some meaningful change into what is already a very successful capital market. And with that, I'll pass back to you, Rocky.
Fantastic. Thank you very much, Andrew, for a very detailed, thorough, but sustained presentation of our report. Now, can I invite all the panelists to turn on your cameras? And then we are going to start the panel discussion. At this point in time, I would also like to invite those of you close to 200 people in the audience to submit your questions via the Q&A box. And then I'll be reading your questions and direct them to the right panelists after this panel discussion, which I think will last for around 30 minutes and well, 20 or so, 20 odd minutes, and then we will have a little bit of time for the Q&A session. So to start this panel discussion, King, I would like to have the first question to you. With a very strong financial market historically, and Hong Kong IPO market has long been a very key growth driver for our city and our economy. Why does the FSDC still consider it important for us to further enrich its listing offerings?
Thank you, Rocky. Before I answer the question, I want to thank Andrew Ding Zhong and all the working group members for their valuable contribution to this thought-provoking and timely paper. I said it's timely because Andrew has already highlighted all the key points. So I don't want to repeat the statistics and so on, but what I want to bring out is the importance of Hong Kong being not just a super connector, but also China's unique international financial center. So we talked about homecoming, we talked about integrating with GBA. So the IPO market does provide this funding channel to these emerging opportunities. But it's not just about homecoming, but it's also creating Hong Kong as a truly global IFC in the Asian time zone. All right. So if you look around, people talk about US, New York, but in Europe, obviously London and now even Amsterdam is coming up, Frankfurt. But in Asia, you look around, really the market that has true liquidity as well as the world-class IPO market, that's Hong Kong. So I say it's timely because, again, for the reasons that Andrew already very succinctly explained, it's time to review our already comprehensive listing regime to create more opportunities for the new economy stock, as well as the very fundamental SME sector. Because in China, let's say in GBA, the millions of them in Hong Kong alone, we have over 340,000, accounts for 98% of our corporate entities in Hong Kong. So yeah, so that's the reason why we need to review our existing IPO framework.
Absolutely, King. We can't just rest on our laurels to summarize it that way. Ding Zhong, as a co-leader of the working group, I would have a question for you. The development of the new economy, not only in mainland China but also here in Hong Kong, is very rapid. Such new economy companies such as technology-related new energy companies are gaining a lot of momentum in China, both in the Hong Kong market as well as the onshore market. So what role can Hong Kong play in terms of facilitating the growth of such sector?
Thanks, Rocky. And before I answer the question, I also want to thank you leading the research team and also the working group members working very hard in a very short period of time to deliver a high quality paper. And actually, I think you partially answered the question already. And Andrew and the King, they are also covered some of this. I will be very short. So definitely Hong Kong, we are a global leading IPO venue. And because of the new economic sectors, are booming nowadays. In mainland China, obviously we can see the main engine for the economy growth is from the new economy sectors. So I think Hong Kong can continue to leverage its proposition of international funding, fundraising hub, and also provide flexibilities in the listing regime to meet the financial demands of these new economy sectors. We all know, in mainland China, there's a lot of unicorns in there, and in the previous presentation, Andrew already touched quite a lot, and we have like 4 largest unicorn in mainland China, and also like 40% of the unicorns also in mainland China. So that's all of those, companies coming from the new economy sectors. They have a huge demands of capital in regards of their R&Ds, they're investing in their human capitals, and etc. And also those new economies sectors, they tend to need a longer period of time to develop their products and also to get the profit. And also, I think Hong Kong, we are a very sophisticated global financial center. We are very well prepared. In recent years, we can see because we introduced Chapter 18A, Chapter AA, and also Chapter 19C, IPO fundraisings by TMT and healthcare companies saw a contribution about 50% and 61% in total IPO fundraising in 2020 and 2021 representatively. In particular, I think Chapter 18A was approved very successfully, with right now 20 biotech companies listed in Hong Kong in 2021, and the total biotech company listed in Hong Kong is already 48 companies. And I also think, in our paper, we'll also touch about that. It's like the success of Chapter 18A. We hope we can, apply this successful to hard tech companies, because the hard tech company definitely is the future country's focus. Besides that, we also see, Hong Kong as an innovative financial center. We have new regimes introduced to the market. Like early this year, we introduced SPACs. And for SPACs, it's especially in the up and coming new economy sectors, for instance, robot taxi players, autonomous driving, space exploration, and green innovations. Investors of those companies will be expected to be more sophisticated, and I think SPAC is a more suitable vehicle for those investors. And last but not least, if we talk about the role, of IPO market, Hong Kong as a, IPO market, inevitably nowadays we have to talk about, geopolitical uncertainties. And Hong Kong, we talk about a lot of homecoming. Andrew already touched that. So Hong Kong already is the listing venue for the Chinese homecoming company. Thanks to the introduction of 19C, Chapter 19C. In last year, we have like 5 secondary listing here. We are expecting more to come. And also, in addition to the secondary listing, we also see a very, very good signs, like the dual primary listing in Hong Kong, like Xiaopeng, like Li Auto. So in conclusion, so Hong Kong is already a very successful, listing venue to facilitate the new economy of mainland China. I think we were doing even better, and also our paper is trying to, do some efforts to make us moving forward. Like Andrew just said, we should, not behind the curve, but ahead of the curve. Thanks. I'll stop here.
Thank you very much, Ding Zhong. And that really bodes well with the next question I have for Virginia, who is a leading practitioner in leading legal practitioner dealing with corporate finance, IPO, M&A stuff. So Virginia, I have a question for you. Since Hong Kong is one of the most sought after listing venues for tech companies and biotech firms, healthcare companies, etc., and like a lot of people attribute this to the listing reform back in 2018. Since you work very closely with these issuers, potential issuers, what are some qualities that these companies look for when they consider the listing venue? Like perhaps when they compare Hong Kong to the other places, what are some of the qualities that they are looking for?
Yeah. Thanks, Rocky, and thank you for giving me the opportunity to be part of this working group. I think based on our experience and just discussions with market participants, I think this can be broken down into three main areas. The first thing is definitely the market, right? It's the access to capital. I think Andrew mentioned the free flow of capital. I mean, that is very attractive to obviously to all participants, including the issuers. Our large profile of investors and shareholders. Also, the great liquidity in Hong Kong, including those for secondary listed issuers. And Hong Kong obviously welcomes all types of companies, the range, as you can see now, I mean, the new economy companies. I think last but not least, is connection to and interactions to the mainland markets and investors, and certainly funds from China. So I think this is the first area. Second area is definitely the exchange and the regulators, right? The issuer looks for rules and regulatory regime and practices that evolve around changes and developments in the operating environment, in the industry, and even in the market at large. And obviously the exchange and the SFC have demonstrated their ability to change the rules quickly to address any changes in the market and to suit companies for to bring them more to Hong Kong. So definitely evolving kind of rule and regimes. Quality of the sponsors and the regulators, so that they understand the challenges that are faced by the issuers and the risks that the business face, and how to describe them in the disclosure document. And then obviously the robustness of the listing regime, because once the issuer is through to the listing, to be listed on the Hong Kong Stock Exchange, it is a great validation of its quality, of its compliance, and of it creates confidence to investors at large. Kind of the third area is definitely the quality of the other market participants, right, in this market, because I mean, the listing rules and regime and other relevant laws are complex. They would need high quality professionals to help them navigate around the rules and requirements, presenting the company in the most suitable manner for investors to understand, and to understand the risk associated with the investments, and obviously to ensure that the company is compliant, not just from a Hong Kong angle, but on a global common international standard level. So I think these are certainly the areas that the companies look for.
Thank you very much, Virginia. I think you and Ding Zhong both mentioned that the proximity to market and where the dynamics are is something that is very important to both investors and market issuers. At the same time, the quality of the regulatory regime and our regulators, as well as how customer oriented they are, would be some other elements that people look for. And last but not least, the quality of the peripherals, or the ecosystem per se, would be like adding to our toolbox, so to speak. So fantastic, thank you, Andrew. I'm coming back to you. You mentioned on page 8 in the presentation that there are certain things that our paper actually recommend for the government and the regulator and the stock exchange to consider. With the listing reform in place, and also listing reform meaning that in 2018, as well as the SPAC framework up and running right now, we are suggesting something similar but slightly different in relation to hard technology, right? So what are some elements that you think we may borrow from those frameworks? For instance, I can see that while we are suggesting to have someone to provide some certain qualities, we do not have the National Medical Products Administration in the mainland or FDA in the US comparable for the hard technology space. So what are something that we can do?
Well, look, thanks very much, Rocky, for the question, and totally agree with what Virginia was saying and what Ding Jay was saying before. Totally agree with the excellent answers. And I also see in the chat box there's some really interesting questions. The one from Dennis about linking it with green tech, I think is a really brilliant point from Dennis. And that's exactly the type of thing we can envisage, Dennis, with GBA, green tech and everything. So that's a great point. And Catherine raises a great point on speed of IPO process. As a former deputy chairperson of the listing committee, she knows the speed at which things move. So that's a brilliant point. Going to your question, Rocky, look, it's for the SSC and stock exchange to really come and work out. But the key features, how do we all manage to get moving on biotech and innovative companies, is making it a framework, a standalone framework without massive regime change, and making it all manageable and doable. Then you get into definitions. So a very good question is, what is the definition of hard tech? I think the definition of hard tech, from my perspective, would be as broad as one can make it, in order to, but whilst being able to satisfy any regulatory concerns. And, you know, I think back to the days of biotech in the early days when I was chairman of the listing committee, I tried to expand it to be all life sciences, anything to do with tech, and got reined in somewhat. And I can understand why. It got reined in because at the time, the concern was, how can you verify the intangible assets of the research and development? How can you verify the market? How can you verify clinical trials? That is extremely difficult in biotech. And we ended up getting a biotech panel, as you know, at the stock exchange to help us. And if you're a corporate finance biotech person, you're in huge demand by lawyers, right, Virginia, and in funds like things everywhere. Everybody was in demand. Hard tech is easier. It's not so complicated in that the layman struggles to understand the basics, which is the situation in biotech. So we've got to get into definition. Then we've got to find a model whereby people, it could be related to ISO, I don't know, where people are comfortable that a verification exercise on the existence and viability of it and the commerciality of it, there's an independent process. That's doable. We haven't got the answer yet. That's doable. Because we had the challenge in the biotech one of it's all about different trials. But what do you do when an IPO comes and it's the middle of the final trial and has gone through the 3 stages of trials before? What do you give to the investor? So there need to be judgment calls on that, but it's doable. And whilst one probably has less of a clear competent authority, one actually has an easier to handle concept. That would be the way I'd look at that. The other one, which I know at the SSC, I think they're totally right, has always looked about, well, who's behind these companies? If you've got a big venture capital company or a big PE company and they've done 2 or 3 rounds of financing and are independent and are putting their own money behind it and other investors' money behind it, that has to be relevant to whether it's a viable proposition for IPO. And so the existence of a professional, be careful when we say professional investor, what we mean by this is not professional investor class. We mean a major expert fund or investor who knows this area backwards and have done their own selection process, their own filtering before putting capital into it. That's very, very important. That's different, I said, from a professional board. So the definition, how one applies the accredited authority model, and then how one actually defines the sophisticated investor. Sorry, that's the language I use. Sophisticated investor are the key ones. But I think it's relatively straightforward, and the key is that it's seen as a framework and not a reopening of the whole regime. The pushback always on change is the unexpected, or the fact that weighted voting rights cannot become commonplace in the Hong Kong market is a given. We accept that. But how do you have enough flexibility that that sort of red line doesn't undermine market development in a broader sense? So these are things which will need to be looked at.
Fantastic, Andrew. Thank you very much. Virginia, you mentioned quite a few qualities when when issuers or potential issuers are thinking of a listing venue. How do you think Hong Kong is compared to the other comparable markets or jurisdictions?
I think certainly, I think in terms of the IPO process, I think it could be, although, I mean, the rules are there and there are lots of guidance letter, etc. But I think when you, in terms of the implementation or interpretation of the rule, it can be quite complex. And therefore, it sometimes issuers would be quite frustrated if, if the rules or the requirements of the exchange are applied in a way that it doesn't really look at the specificities of the company, of the businesses, right? Sometimes issuers is, why is this question relevant to me? I mean, I'm not, I don't have a huge risk in this regard. So I think sometimes the issuer maybe frustration is that they feel like that their businesses are not fully understood by the regulators, and maybe sometimes I think we are guilty of that process by the professional party. So I think certainly that's one thing, and I think that may lead to the other thing is then it prolongs the vetting process, right? Because of the questioning, the extent of the questionings and the improvements in the disclosures, then it will drag out the IPO process kind of to a time frame which is much longer than originally contemplated. And hence then issuer feel like, I mean, particularly in this market, right, then issuer feel like that they would miss the window for them to do the fundraising, when it's particularly challenging here. So I think last but not least, I think, for example, in the assessment of the innovativeness, there is, an element or, of subjectivity. Then this creates uncertainty and unclearness, and sometimes it's very hard for people to predict the outcome or the success of whether we can demonstrate a company being innovative. So I think if we were talking about hard tech, I think like what Andrew said, it may be an ease in terms of the definition, in terms of the assessment, it could be much more easier. Hopefully the regime can be more transparent, and there's more independent assessment or validation, so to give more clarity and kind of certainty of that process.
Thank you very much, Virginia. We talk a lot about the first two areas of our paper that highlight the innovative voting right, and a little bit more about the hard tech recommendation. Let's focus a little bit more on the SME part. Ding Zhong, I'm turning this question to you. SMEs are, obviously a very vital and integral part of the Hong Kong's economy, representing around 45% of our workforce, and and that is a big component. What are some of the recent trends that you have seen in the development of SMEs? How can Hong Kong actually leverage its financial market to develop an access to funding for the Greater Bay Area SMEs as well? Ding Zhong, you are on mute.
Oh, sorry, Rocky. Yeah, thanks, Rocky. This is a very good question, and also, this question is one of our objectives. Try to answer in our research paper. So, just like you said, SME is very, very important globally. It's not only present like 90% of the business, but also like in Hong Kong, 45% of the employment, and globally is about like 50% of the employment. So every government, every country is looking at SMEs very, very seriously. And I want to put another angle. It's like because of the development of ESG, and people and the government looking at SMEs even more seriously, because how to provide financing support for SME is very essential nowadays. Financial inclusion is part of the social aspect of the ESG. And for SMEs, we all know it's very difficult for them to access to loans and other financial markets. So how government and societies can provide to give them opportunities to access to adequate adequate funding is very, very essential, not only for SMEs but also the success of our societies. And very interestingly, the SMEs, they are very a lot of successful SMEs, they're very innovative. Like we already witnessed quite a lot of Chinese SMEs, they become unicorns. Like years ago, Tencent and like Meituan, we all witnessed those SMEs become unicorn, global unicorns. And you mentioned about like GBA. So if we look at the Guangdong province, we can see there's a lot of startups, a lot of SMEs, and also a lot of unicorns. And there's one aspect that's very interesting. Guangdong province has a lot of entitled, a lot of #1 in the country, but also Guangdong province has a specific #1. I think it's very interesting. Is for the past years, Guangdong province is in the country is #1 in terms of the number of international patent applications. So that means that a lot of Guangdong province SMEs and other companies, they are very, very innovative, and that is the opportunity for Hong Kong capital markets, right? Because a lot of them, they are not listing yet. So as the investment gateway link mainland China and the rest of the world, Hong Kong can continually to sustainable develop the SME and enable to implement the country's goal, like dual circulation and in GBA. So I think GBA and Hong Kong, we can have a lot of synergies. GBA can leverage Hong Kong's world-class capital markets to fuel the growth of real economy. And Hong Kong obviously can further enhance its value proposition of a global financial center, right? So Hong Kong, like in our paper we addressed, Hong Kong right now, we should reassess if our existing market structure can really capture the opportunity of SME IPO, can support SME better. Yeah, I'll stop here.
Thank you very much, Ding Chong. That really brings me to the last question I've prepared for the panel, and that is for King. Besides our primary market, obviously there are a lot of things that the FSDC is currently working on. In order to ensure that Hong Kong will continue as a leading international financial center around the world, perhaps you can give the audience some flavor of the projects that we are currently working on.
Sure. In fact, I want to take the opportunity to answer some of the questions posed by the audience because they're relevant to what I'm going to say. In addition to this very thought-provoking paper, we are also looking at the whole capital formation structure of Hong Kong. We look at, for example, the liquidity of Hong Kong markets, how we can actually enhance liquidity, because that will mean better price discovery, higher trading volume, making Hong Kong more attractive to IPOs. So there's a question on small mid-cap stocks, right? The liquidity of that. And that may also bring up another issue or project that we are looking at, how to reform GEM. Can we turn GEM into a professional market, right? Because that will also provide a different fundraising channel for SMEs, for innovative companies. There's also another question from Mike asking, whether hard tech would include mobility, semiconductor, and all that. In fact, yes, it does, because in our paper we define hard tech. It's a very broad concept, but definitely, new economy companies, manufacturers, innovators can potentially be all included in this pre-revenue listing framework. But this professional market, again, coming back to this topic, I think it's not just about potentially SMEs, but I also saw questions asking about crypto assets, virtual assets, tokenization, right? These are very complex products. We already know that the Hong Kong government is now going through a legislative process to license virtual asset service providers. To me, that's very good news, because that means the regulators, the government, are recognizing virtual assets, are coming up with the appropriate framework to regulate the industry. But definitely, to begin with, it's very limited to professional investors only. But virtual assets is not just about crypto, about tokenization, tokenizing real assets, crypto asset derivatives. These are very sophisticated products, might not be suitable to retail in general. But what about trading between professional investors? Sophisticated professional investors, as Andrew alluded to earlier, right? It's not just meeting the necessary AUM type professional PI. So these are the projects that we are currently looking at. So we hope we can report back to the audience and the market with our progress very soon.
Thank you very much, King. And now I would like to go to some of those questions that have not been answered yet. I see KM have put in a couple of questions. KM is a CFO of a leading listed company in Hong Kong. He would like to highlight that Hong Kong's market has been very volatile for the first few months, and there could be some concerns around the volatility of the market and how how it may actually affect the ability of Hong Kong to serve as a listing platform. Does anybody have any thoughts or any potential answers for such a question?
Rocky, I can try that.
Oh, okay, I see that Ding Zhong has a hand, and then Andrew, perhaps you can add to it too. Ding Zhong, please.
Yeah, thanks. This is a very good question, and right now we see Hong Kong markets are very volatile. I think there's a couple reasons. Like yesterday, I talked with several investors from companies, investors. They're also asking the same questions about the volatility of Hong Kong market. I think first of all, it might not be something wrong with the market, but with the time. So at this time, if you see globally, quite a lot of markets is very volatile. And if you look at like a couple months ago, look at the US market, look at NASDAQ, they all have a quite big of volatility. A dramatic drawdown of there is because we all know US is trying to tightening, is trying to hiking their rates. So obviously, global funding will come back to US and withdraw from the high growth sectors. This is the first. Second of all, we all know the geopolitical risk recently, like Russia and Ukraine, inject quite a lot of uncertainty into the capital markets. And of course, we can understand, like Hong Kong, we have our own problems. Like recently, the high-tech company, the central government's the policy try to punishing those unicorns, those companies, the monopoly high-tech companies, and that will inject quite a lot of volatility in the market as well. And also we can see the geopolitical risk between mainland China and US. A lot of ADRs are facing delisting risk in US. I think our paper already addressed that. Hong Kong is a very good capital international finance. I've seen Hong Kong definitely can play a big role in that part. And also today, the central government deputy Prime Minister Liu He holds a national security, financial national security meetings in Beijing, and address quite a lot of uncertainties, clarify quite a lot of uncertainty in the market. So we see the market bounce back dramatically today. So we will see, you know, central government begins to work on to solve some, you know, our own problems of capital markets, like a lack of transparency, like you know, how whether, you know, the when the policy comes out, whether, you know, we should the central government should consult the financial regulators before the policy comes out. They are all be mentioned in that meeting. So this is what we never see before. So I think that will clarify quite a lot of uncertainties, concerns from the investors, and that will bring, you know, Hong Kong IPO market more opportunities. Yeah, I'll stop here. I know Andrew will have something to say.
Andrew, please.
No, I've got nothing to add. I totally agree with what Ding Cheng said. Nothing to add, and summarize it excellently.
Thank you very much, Andrew and Ding Chong. We also noticed that Andrew, you know, like you previously was the listing committee chairperson, and so you know, like with you being in the Hillam back then, and you driving through the listing reform, hopefully we can see some you know, additional force this time with you steering our you know, working group. A lot of the questions have been answered, but you know, there's one more. If the audience doesn't mind, if those of you in the audience don't mind, I would like to also ask this question from Gary, who you know, raised a very good point. He asked to what extent Hong Kong can actually best align its interests with the mainland's national objectives, and to what extent has such been acknowledged and understood by mainland Chinese authorities. Well, asking as we believe many of the Connect effort require support on the mainland China side, and what can FIs, you know, financial institutions or individuals in our sector do more? So I think, you know, this question is a very, you know, interesting, and I think some of you can actually offer insights to Gary and the rest of the audience.
I think you can get on this. It's a great question from Gary. By the way, I think all the questions are superb, and we ought to put them into our an iterative process to update our report and put it into our consideration. Superb questions. On Gary's one, just a couple of reflections, and I don't profess to be an expert on mainland policy, but my read of it is a way to get things done and to bring change in when looking at regulation or looking at market development is exactly what Gary says. To demonstrate it's for the good of Hong Kong and it's aligned with national priorities. And as Dig said in her summary, and Virginia also did in hers, this is aligned with national policy on GBA, fostering innovative companies. Raise a very good point on Connect. And there was a big debate, if you recall, in the early days about how to get weighted voting rights companies into the Connect scheme. And then eventually, when it was seen it all related to innovative companies and was aligned, one was able to support it. So I think it's a great question from Gary. And if we can show this is aligned with national policies, which we are doing, and it's for the good of Hong Kong, Hong Kong's good at moving quick. If the central government, FSDC, and top of the exchange, top of SFC is aligned, and then it comes back down for everyone to sort out the detail. By doing this report, that's what we're trying to do, is to create that environment and that debate, like we did on the REIT paper 6 months ago.
Yeah, hi. I want to echo Andrew. I think this is exactly what FSDC tries to do, is to solicit comment, advice, and suggestions from on all the industry stakeholders, so that we can actually put together policies that we believe can meet both the Hong Kong interests as well as the national objectives. Yeah. And on that note, I also want to just do a bit of marketing. Like, for example, with China's carbon neutrality goal, Hong Kong has a wonderful opportunity to develop carbon trading, right? And so that's a project we are embarking on soon. Yeah. Thank you
very much.
Rocky,
you have something to add?
Yeah. I can echo a little bit about King and Andrew's point. Totally agree with that point. So Gary, you raised a very good question. So you said, all the connect will get agree from mainland side. don't forget, keep this in mind. All the connect are mutual benefits. So like Stock Connect, like Bond Connect, they are mutual benefit, both Hong Kong and mainland China. And also Hong Kong is China's financial international financial center. So obviously, Hong Kong is in the very top of the priority list in the government in central government's priority list. And also, I think you said how FI and other stakeholders can do in that. Don't forget, like Stock Connect, ETF Connect, Mutual Connect, it's all raised by Hong Kong side. So if you have good ideas, you can use FSDC, this platform, and use us as an instrument. We can create more connect. Thanks.
Thank you very much. And with that, I would like to call this and the end of this presentation. But there is something more. Please stay with us. We are going to pull up the polling and just wish you to tell us how we can do better. Thank you very much for staying with us, spending an hour and 5 additional minutes with us. And do tell us what you think about the webinar. Thank you very much, and hope to see you next time.
Thank you.
Thank you. Thank you.
Thank you.
Thank you.
Bye.
Bye.
We cannot participate, so how can I?
So I was waiting for the. Okay, bye bye.
Bye bye. Take care.
Take care.